So for those of you who are hearing about Desert Gold for the first time, we are a gold mineral and exploration development company situated in Western Mali in the Tier 1 jurisdiction. It's known by a couple of names, the Senegal Mali Shear Zone, the Kinyeba Window. But essentially, this is an area where there are several world-class producing gold mines, some very large multi-million ounce deposits, and a number of other projects that are also under development, likely going into production. Mali, as of the 2023 numbers, is now Africa's third largest gold producing country officially. Of course, there's a lot of other gold artisanally that's unofficially produced there as well. Myself, I've been active in Mali since 2011. My technical director, Don Dudek, has been active there since 2012. He's had a number of significant wins in West Africa. I'll touch on that as we go through the presentation. And so our flagship project is the Senegal Mali Shear Zone project. Our central piece of ground started off as around 70 square kilometers. And in 2016, we started aggressively acquiring more ground, and it's now a regional sized project rivaling any of the majors in the area from a land package perspective at over 440 square kilometers. And I do think that's one of the distinguishing factors about Desert Gold is, as a junior company with a market cap of around 15 million Canadian, we have very much an outsized presence in the belt from a land package perspective. And, this is not just green field. We've got combined resources a little over 1.1 million ounces at an average grade of about 1.15 grams per ton. These resources come from 5 areas, but there are more than 25 areas on the property, 25 gold zones on the property, all of which are open, geologically speaking. That is to say, they're open along strike and to depth, and that includes the existing resources. So the likelihood of growing this resource base is a virtual certainty, and so that's one of our main goals, is to expand the resource base. But at the moment, we're running 2 strategies in parallel. We've got our exploration strategy, where at the core of it, what we're trying to do is develop a resource base that can host a Tier 1 mine. And in this district, what we consider a Tier 1 deposit is something that can produce a minimum of 200,000 ounces a year for 10 years. But I'll get into this in a bit more detail. Perhaps I should advance a slide here. So corporately, we've got 211 million out non-diluted, 54 million warrants, 12 million stock options. So fully diluted, 277.9 million issued and outstanding. The warrant schedule is below for those of you who want to take a look. And major shareholders, management and board, are significant. Institution out of the US, Merck Investments, owns a good chunk. Another household name you may recognize, Ross Beatty, owns a chunk. Elemental Altus Royalty, Grand Peak Capital, which is an investment holding company associated with our chairman. And so we've got a pretty good roster. And like I said, Mali's now the continent's third largest producer of gold on the continent. That shows no signs of slowing down. All the major deposits in the districts are still open, and production is still expanding. So this picture is probably the most valuable in a sense of understanding the story and why we're doing what we're doing. So this is the Kinyeba Window, the Senegal Mali Shear Zone of Western Mali. You can see at the north of the belt, Allied Gold's Yatela Sadiola mine. Yatela has since been mined out. It was a little over 3.5–4 million ounces. Sadiola still has 7.3 million ounces of reserves. It produced 175,000 ounces in 2022. I expect that those productions numbers to ramp up significantly as Allied gets going and upgrades its operation there, which it's in the midst of doing. Going further south along the camp, you have our project outlined here in yellow. This is the Senegal Mali Shear Zone project. Like I said, it's taken a lot of effort to consolidate this land package and to ensure that we have exposure to the two main regional features that are associated with all the large gold deposits. One being the main transcurrent, which we've outlined for you here in gray. And the major one in the belt is the Senegal Mali Shear Zone that goes north to south here. So going further south along the belt, you've got Barrick's Loulo-Gounkoto mine complex. They produced 700,000 ounces in 2022. It'll be interesting to see what their 2023 production numbers are, but they're still going strong. Algom, the Tabakoto-Sagala mines, these are two twin deposits that are very proximal to one another. Our technical director, Don Dudek, worked on this mine in 2012 until it was bought out by Endeavour Mining for, I want to say, about 460 million in a public transaction. Further south along the belt, you have Fortuna Silver. This was previously Chesser Resources. Fortuna bought them in a public transaction in 2023, valued around, I want to say, 55 to 60 million. And then, of course, going further south along the belt, you have B2Gold's flagship asset, their Fekola mine, produced over 600,000 ounces in 2022. I'd say the production will probably increase. They're spending a lot of money on exploration. I think they're potentially looking to build another mill, and they're exploring the permitting around doing that. And then on the camp that dips into the Senegal side, you've got the main transcurrent, which is related to Resolute's Mako mine, Endeavour's Massawa Sabodala Gora complex of mines. That was previously Integra, and they were bought out in a multi-billion-dollar transaction. So needless to say, this is a very active mining camp from an M&A perspective, from a mining perspective, and also from an exploration perspective. And this is a little bit of a history of the M&A that's gone on in the belt. And basically, the major takeaways from this is that the average acquisition cost per ounce that the majors paid for explorers or early stage developers, producers, was $91 Canadian, or about $70 US per ounce. I think Desert Gold's trading between $8 and $10 per ounce in situ in the ground, and from a market cap perspective. So there's a lot of delta there. There's a tremendous amount of upside just from the existing resources we have. And like I said, I think it's a virtual certainty that we'll grow that resource base with more work. This is a plan view of the project. It's a bit of a technical image, but I'll just highlight the most salient points. The background is analytical signal magnetics, and the major takeaway from that is to the right, or to the east, you have the blue, which are magnetic lows, and to the west, you have the red, which are magnetic highs. And basically, you have two completely different types of rock packages converging along this shear zone that we've outlined for you in this dashed line. The yellow and purple dots are soil geochemical samples ranging from 50 ppb gold all the way up to 16,000 ppb gold, or 16 grams per ton. And you can see the concentration of these anomalies are proximal to the Senegal Mali Shear Zone, and that's no coincidence, because all the major deposits seem to be discovered proximal to the Senegal Mali Shear, and likewise to the main transcurrent. So the stars that you see, the black stars, are where we've discovered gold zones with drilling. And in the black and white boxes, we've highlighted for you some intercepts from the drilling presented in terms of grades of gold over width of drill intersection. The larger gold stars are where we have current resources. And like I mentioned earlier, the 1.1 million ounces of combined resource comes from 5 zones, all of which are open. The other strategy that we're running in parallel above and beyond the exploration is mining. And right now, we've undertaken a preliminary economic assessment to evaluate the potential of mining oxide gold via heap leach method, low-cost heap leach mining method. The majority of the deposits that are found in this part of the world, and and you can see it all throughout this property, tend to have an oxide cap on the top that happens either at surface or within a few meters of surface. Those oxide zones usually contain free digging gold that's quite easy to recover. And so, being what the gold price is, we started looking at the viability of fast tracking into small scale mining. And so we've just completed some drilling to initiate the preliminary economic assessment. We conducted an internal desktop study about 6 months ago based on $1,800 gold. And the numbers looked good internally then. So we're very much looking forward to completing this PEA. The drilling that was just finished was so that we could recover metallurgical samples to do column leach testing. And column leach testing essentially just simulates what the recoveries will be when we actually do the mining via heap leach. And the other drilling was done for geotechnical purposes to help us with the pit design. But in addition to the drilling that was involved with the PEA, we also drilled 4 very important exploration holes. 2 here in this central area at an area known as Frikiti. We did a mapping and grab sampling program here going back a couple of years because when we went to visit this area of the property after the rainy season, there were some maybe 1,500 artisanal miners mining shallow surface minerals in an area that was roughly 4 kilometers by 2.5 kilometers. Shallow open pits, mine shafts. And so we did some sampling. We pulled over 100 grab samples that ran north of 5 grams per ton. 5 of them ran over 100 grams per ton. And so this was an area previously not drilled. And so we followed up with some shallow angled RC holes, and we got some really good grades, but the widths were sort of mediocre. But when we went back and reevaluated to follow up this year, we noticed something in the artisanal workings, which are essentially stacked flat-lying lenses of gold mineralization. And so we were quite eager to get back to this area to drill some vertical holes to see how many of these stacked zones of gold mineralization we could potentially intersect. Because our first pass drilling we did with angled holes, we could have potentially missed a lot. So we're very much looking forward to getting those assays back. The second area where we drilled is Mugiafara South in the bottom right here. This is the largest gold resource we have on the property to date at roughly 420,000 ounces. The drilling that was done in this area was done by Hyundai Motor Company in the late 1990s. We were a beneficiary of the data set. We went into the field, relocated all the collars so that we could include it in our inferred resource category. But we were quite eager to get some firsthand information, which is to say our own drill core, because the drill core didn't last. We never were able to find it from the late 1990s. So we drilled 2 very deep core holes recently completed within the last 2 weeks. And, we're very much looking forward to getting those assays back because we were pretty excited by what we've seen in the core. But obviously, I must qualify that statement by saying, the assays are the most important thing. But Mugiafara South is a very large area of broad-based mineralization, which is to say, you have an area that's roughly 4 kilometers from north to south by 2.5 kilometers east to west of anomalous gold in drilling, in auger samples, in soil geochemistry, in termite mound sampling. And the vast majority of the drilling that Hyundai did in the late 1990s was quite shallow. I think the average depth was roughly 80 vertical meters. The 2 of the core holes we drilled, were between 250 meters and 300 and some meters. And there's step outs, both from a location perspective, but also from a down dip perspective. And so what we're hoping to do is intersect broad zones of gold mineralization based on what we know about the area. And we're very much looking forward to getting those assays back. I'll just move down a little bit. So this is a breakdown by zone of the gold resources that make up the existing resource of 1.1 million ounces. I won't go through it zone by zone. It's more just there for your perusal. But needless to say, all these zones are open, and there are other zones within the property package where it seems fairly obvious that we're going to be able to incorporate new resources. You know, maybe one of the areas I'll touch on briefly is this northeastern trend here. It's kind of difficult to see because of all the soil geochemistry, but there's essentially a dike that cross-cuts the Senegal-Mali shear on a northeast section here. And, you know, we did some first pass drilling up here, shallow 50-meter core holes underneath some artisanal workings, and there we intersected 2 grams over 30 meters in the bottom 30 meters of a 50-meter hole. We haven't been able to go back to that area because we've been so busy on other things. I think that's one of the major takeaways, high level, about this part of the world and about doing exploration and resource development work on the Senegal-Mali shear zone. There is gold all over the place. And it really comes down to prioritizing your best targets where you see the potential to develop economically viable deposits. And that's what we're doing. This is just some sort of theoretical visualization based on what our exploration model is and how we advance targets through baseline evaluation, through developing drill targets, and ultimately into gold zones and resources. And so, you know, I won't get into it, but needless to say, I think our target model is working. And our target model is based on trying to maintain as low of a discovery cost per ounce as we can to make our shareholders' money go as far as possible. So this was the program that we've envisioned for this year. We've completed parts of it. The core drilling at Mugiafara South, for example, all of the PEA drilling at Barani East and Gurbasi West, West North. Like I said, that'll be done to incorporate the small mine PEA we hope to have out in Q4 of this year. And all the other yellow dots and orange dots are the next phase of drilling. And the yellow is air core, the orange is RC, and the red is core drilling. And you can see these patterns that emerge in terms of where we're trying to drill. And it's along these major trends where we have, let's call it, we have made discoveries of economic grade gold over width, but these areas require follow-up because they could potentially materially add to the company's resource space. So we're going to try and get, if not all, most of this work done before the rainy season comes in. Maybe that's something I should mention. There's a rainy season in West Africa and West Mali. Usually starts in the second half of July, goes through to November, end of October. And you really can't be moving a rig around and heavy equipment during that time of the year. If you develop your infrastructure, you can mine year round like the majors do, but to be running around with a rig, you can get stuck and it can become quite costly. So high level, this is one of the largest contiguous land package of any non-major in the belt. I think that's one of the distinguishing aspects of Desert Gold. Our target model is working, and it's working well. Like I said, we've got a maiden resource of a combined 1.1 million ounces. Really, it's just the beginning. I think it's going to get significantly bigger, and the goal is to push towards developing a tier one deposit. And like I said, in our mind, that's something that can produce 200,000 ounces a year for a minimum of 10 years. 24 known gold zones. In fact, it's more than that now. It's probably closer to 26 or 27. And all of them are virtually open, including those that have resources. So the likelihood of increasing it is a virtual certainty. So there's tremendous upside. And we are waiting on assays that have to do with recent exploration where we've drilled some of our most exciting targets, and also assays that have to do with our preliminary economic assessment. And, I can't really get in specifically to the metrics of that. It's all subject to the PEA. But based on what we're seeing, we see the phase one in mining could produce anywhere between 15 to 20,000 ounces a year to start. But we see that potentially expanding significantly. And, we're very much looking forward to coming out with that PEA, because we think it's going to be compelling given the grades, given the type of mining we're looking at doing, the gold price, and the fact that Mali is one of the lowest cost mining jurisdictions in the world. So we've completed our first phase of drilling this year. We want to start our next phase up here within the month. And that drilling should take 5 to 6 weeks to complete. And then we'll use the rainy season to finish all the technical work with the PEA and put out the rest of the assays for the drilling. The assays that we're waiting on now, the drilling we just finished for the exploration work, that should come out, give or take, in the next 4 to 6 weeks. It really depends on how backed up the labs are in Bamako. And the assays for the PEA work will take longer because, like I said, we're doing column leach testing, and that can take several months. And that really what that does is it simulates the gold recoveries. So fast tracking to mining via heap leach in the near surface oxide zones, and going after some low hanging fruit via exploration. This is one of the best places in the world to be going after, trying to find big gold deposits, and that's why we're there. So, Julien, I don't know if you have any comments or questions. Happy to address them.
Well, first off, Jared, thank you very much for the interesting presentation and the update. It's always fun when there's drilling and result coming in there very soon. As you know me, yes, obviously I have comments and questions. There's two things about it. I think you want to close that because you are sharing this update. Well, you want to keep it. Okay,
yeah. No, it's
this
just
is
an
your
update.
LinkedIn
It's just
post.
an
Is that
update
right?
Yeah, I just wanted to give you a visual
Okay.
in terms of what I was talking about.
Okay, perfect. Just wanted to make sure you weren't sharing anything that you could not share. Who knows? Well, Jared, I will start with not a question, but basically a comment, because I'm allowed to say things that you cannot say. So please do not agree or disagree. But simply, in the example you were giving, 20,000 ounces, if we can figure out maybe profits of about $400 or $500 per ounce, that means profits about 10 million per year. So, I mean, if we are in those waters, which normally such a project would be, and this is my personal opinion, not the one of Jared or the IIF, but this is a bit what you're looking at, plus minus 50% or whatever, doesn't matter. Point being is that those can be profitable numbers and can make a junior mining company self-sufficient. And this is the dream of every CEO that is out there. I'm on a lot of boards myself. I know the struggle. I understand what it is, and this is the dream. So the entire IIF team, we wish you good luck on that. Hopefully, numbers of the PA will come out positive and looking into that direction and make you have a big jump forward, both in valuation and then in also execution of what's possible for Desert Gold. One of the thing also that is important is a lot of companies are waiting to develop this tier one asset, this 200,000 tons per year. They're waiting for 300, 500, 700 billion dollar capex to go on before seeing any revenue. Share prices dropping. Investors are losing confidence at one point, which is normal because they're tired of waiting and so on. Personally, I absolutely love the idea of starting a small production. Also acts as a proof of concept, makes it a lot more interesting for a major company to then step in, confirm metallurgy, confirm all the. It's a major de-risking of a project, no doubt about it. Obviously, it would be in a different type of mineralization that what would be the tier one asset maybe, or half an hour, but it still confirms all the theory. Now, we had a lot of talks today. First off, all-time high gold.
Sure.
What does that mean for your company? Have you seen the phone starting reading a lot more? Are funds more attracted to the space? I mean, did it change anything on your side?
Yeah, I think it is, and I think it has, but I think we're very early days,
Yeah.
and maybe that's where some investors are getting a bit frustrated. Listen, up until what, January of this year, gold has essentially been range bound since 2012. So this new breakout to the upside has been pretty bit brisk. It's happened fairly suddenly, and I think investors need a bit of time to digest this. But certainly, generalist capital interest from generalist capital is peaking up. And to your point about mining oxide, the we're tailor making this solution to be something that can actually be done by a smaller company like ourselves.
Yeah.
It's why we're envisioning heap leach mining. It's a very simple, low cost mining
Yes.
method. And so it can make mining viable, smaller deposits,
Yeah.
much more viable. Because I think you touched on a great point. If we go and find 2, 3, 4 million ounces in fresh rock, which is very possible in this part of the world, everyone knows that's a $200 to $400 million capex project. And a junior company with a 50 to $100 million market cap is going to have a tough time. And that's why in this part of the world, when juniors find something interesting, they just tend to get bought out. Um, because there are some companies around with some really big balance sheets that can do that no problem in the area. But to your point about the juniors, I just think it's early, and what I'm really hoping is that this run of the gold price doesn't necessarily need to keep going parabolic, but it just sustains itself for a while.
Yeah.
Um, and that's typically how bull markets form. They form more stealthily. And the
Ab-
bigger, more liquid companies attract the capital first, and it kind of trickles its way down. So I still
Absolutely.
think it's very
I,
early days.
Listen, Jared, I would love to have at least another half an hour to discuss
No,
with
it's all
you
right.
for no, but for a few things. Because first off, the fact of a junior mining, a junior explorer that wants to turn into production means a lot management wise, experience wise, staff
Hmm.
wise, the
Sure.
company entire structure and so on. It prepares and it brings such a different type of core competences and so on to the table. I think this is
Hmm.
mesmerizingly interesting, but it's
Hmm.
29 and I still have 1 minute, and that's not enough to cover it. However, on the price of gold, I will say one thing. I think
Yeah.
you're right on this, and I think it's early because it didn't translate in financials of the major companies and other companies. So as soon as we're going to
Yep.
start seeing hitting
Exactly.
the
Exactly.
financials and the
Hmm.
bottom line of those majors, then I think companies like yours are going to profit of it. Jared,
Give them a few quarters to let them show their profitability.
thank you very much for your time. Absolutely. And we'll be keeping on following your success for sure. Thank you again.
Thank you, Julien.